Okay, we are live again. Let me pull up my screen. I forgot to do that initially. What do we want here? We want Google Chrome, Corsair. Pull up the chart. Okay. Obviously, this has been ugly sell off. It's just liquidation. You guys are going to be coming in a little bit later and after me. We are now at a level that I think they'll probably sit, step off the stock, stop, liquidating, harvesting, doing what those PE animals tend to do. Um, and we'll see. Right now, I'm sending this out to my Discord as well as Substack. Hold on, how do I get the link? If you're coming in late, you can safely skip ahead a couple of minutes as I figure out this because I'm not the best streamer. Live if you guys want to join. Almost. Alrighty. No moat, no moat, no moat. Um, yeah, we got some dumb shit. We got some dumb shit. People like see a stock going down and they invent a bear case. Excuse me, a stock that's trading 6 times EBITDA doesn't need, a moat that these mega caps need. Okay, it's got a brand. It's got a brand and it's got a business. So we're talking about Corsair Gaming right now. Um, uh, they have a good RAM business. Obviously, they don't actually manufacture the RAM. Okay, what are we talking about, right? Oh, we got a little bit of nope. Connect here, connect here, connect here. Um, so they take package Samsung or Micron DDR5, DDR4 they used to do, and they sell it. And as far as the vengeance goes, like that's a top two, probably top one RAMs for consumer to buy. They trust it. They trust the brand. That is enough of a moat. But also, like we're talking about, a company that is probably trading at a forward PE of 7, 6, 7, and at that point, it's like, you know, why are you putting the same, you know, like why don't you do that to Meta? Meta's at 24. Like why don't you really try to like, you know, exploit Meta's, moat, right? Do you think it's going to last 24 years? Maybe, maybe not. For Corsair, based on the price to earnings ratio, max, you have to think that the business is going to be around for 9 years at this earnings level. So realistically, like these guys just like don't really know what they're talking about, and that's okay. You can be clueless, but it's your job to get unclueless. If you want to live in super pricey stocks for your entire life, you're gonna love the moats, and you're gonna pay ridiculous multiples for stories. I think it's very important to think about the competitive positioning of a business. Okay, but I have, and I like it for Corsair. Again, for a 70 billion parameter model, everyone go up to AI. Go say, Claude, what's the cheapest way and the best way to run a 70 billion parameter model? And be like, plan, do all of your research, let me know, because I'm a consumer and I don't want to spend too much money. Your options are DJX Spark 4K. I don't even think HP and Dell have any options, but they're just too bloated. Like nothing comes up when you search it on there. You might get an AI workstation, but it doesn't have 128 gigabytes of RAM. Getting 128 gigabytes of RAM, and excuse my dirty room. It's clean, I promise. I just haven't folded. Getting that for $2,500 on an AMD 395, that's pretty good. That's pretty good. What Corsair does is they design, obviously the shell. This box is actually really small. It's like, half of my arm, my forearm to hand. They design that. They design the motherboard. They package the RAM, and then they sell it with their brand. It's like I'm not saying this should trade at 40 times forward, 30 times forward PE, and grow to the moon and become $1 trillion company. It's just kind of clueless. What you have to do is underwrite. Can this business grow? And it's growing from 1.4 billion. Okay. Can it maintain margins and profitability? Well, it's the only company out of Dell, HP, Corsair that's actually growing gross margins. They have 33% gross margins. Their peripherals, I got Logitech. I spent $30 on this. You can get a more expensive Logitech, but the truth, the fact is Corsair comes in at a higher price point across the board. And with that comes better margins. Whether it's keyboards, headsets, mouses, whatever. Apparently there's cooler brands out there in the super nerdy gamer world. It's like, I don't care, okay? They look cool to me. I would buy one. I wouldn't know anything about what's trending in, Minecraft universe, or who knows what the hell these guys are playing anymore. It just needs to sell, and they're profitable when they sell. You can look at Razer, that's a $3 billion market cap. Okay. They got the best keyboards? Okay, well, listen, look at Razer's, multiples. You're buying a business that is solid. That's it. Doesn't need to play hero ball to justify the valuation. And there's a couple things that come into play once you realize that this AI workstation is going to sell. That's going to be a huge component for them. It's bringing in people that are not gamers per se. And if they are, they're going to still, like, maybe they like Razer keyboards and they're like, oh, I don't like, Corsair's, whatever. But when they go through the options, like, are they going to buy GMK Tech for $2,700, pay $200 more to get the same specs on a Chinese company that has no customer service or warranty that they've never heard of? No, they're not. So theoretically, Dell and HP could come in and do this, but I think it's a good slug of demand for Corsair. And then what you have to understand is what people really don't like about the keyboards and the mouse is, like, it's kind of like, if you get the keyboard, you got to kind of get the mouse on the same software, and people don't like that. But if you already have a Corsair system and you're like trying to cross, you're probably not even going to play games on there. It's probably going to go above your desk, and you're going to have your gaming PC under your desk. But it locks you into the system, and it's sort of the okay, if I'm spending $2,500 and if I'm going to be at my computer so much, it's kind of the Diderot effect, where all of a sudden you buy one thing and you want to upgrade everything. So that's going to help their peripherals. But again, 60% of their business is desktops, the full build or parts for the build, and particularly RAM as far as parts go. This Eagle Tree, Willow Tree, whatever it's called, getting out of the stock is not a business. It's no indication of the business. You know, at the end of the day, they're kind of forced to do this, right? It's unfortunate for us. There we go. Let's do that. They're not blocked out. You know, who want to, you know, tell the story, but it just literally it's a 10-year vintage. They're getting out. That's what it is. Um, at the same time, like that's cheaper shares. When they're out of the way, this personality is going to completely change. It's kind of just charges it up more because there's closer to next quarter, closer to the fundamental inflection. You know, maybe we get a print or whatever. So again, it's like kind of like the Jack story, and we got Jack earnings. I forgot to say that I was going to talk about Jack, but let's talk about Jack. I added more at 522 on Corsair. Could go down to 450, you know, but I think it bounces back to $6 first. So I'll be trading that pretty actively. Okay, here we are in Jack. Now let's add the 200-day. SMA. Okay, above the 200-day for a hot sec, and then it went down. You saw this big breakdown last April. Why? Tariffs. Welcome to tariffs. And it's at that level now. Broke down even further at one point. Last quarter was no good. No bueno. But then it kind of just started rallying. People were talking about tariffs coming off, and the Supreme Court decides, we're not doing anything. You know, the mulligan here, like, when I kid you not, this is a total mulligan quarter. Like, I don't see how any print could, you know, make this stock really react poorly. I know what management's doing. They're been conservative. You know, there's not going to be real true surprises unless it's the upside. And then it's like, oh shit. So I like Jack. I like it as an ad here going into the print. And 2026 is the full story. It's like, you know, just show a little bit of patience. You know, I don't need to act, you know, people want like daily questions. It's like, you have eyes, go look at it, like go figure it out, right? You know, at the end of the day, you know, it's like whether it's TikTok or it's Substack or whatever, like you don't pay me enough to be your brain, you know, and at a certain point, you just have to just relax. You have to legitimately chill and have some patience. You're not getting rich overnight. You know, sometimes you don't even make money for a little while, and then it starts working in your favor. And I think this is a stock that's $35 in a year from now and pays you a 5% dividend to wait. And I think it might be 6%. You know, they could raise that dividend. They're conservative. They could make, you know, some acquisitions. Their partnerships continue to grow. 2027 is going to be, you know, the best year it's ever had. 2026 is going to be as good as 2024. And again, if you look at this chart, it's like, you know, you want to talk about ranges. It's like, okay, this thing is kind of at the bottom of the range. It would make sense. You know, if it gets above that 200-day and it just, you know, acts well above it, you know, I think a lot of people are gonna start buying it. Because in small cap fund manager land, you know, they're not looking for, you know, wins around prints or quarters. It's really like, you know, what is gonna, you know, help me out this year. You know, it's not 5-year calls usually, but you know, they're used to portfolio volatility and they just want to end the year strong on their high watermark. Jack is a great company to do that. I love the company. I think it's starting to get favorable. I mean, again, I don't know. Could be now, could be later, could be never. AXTI, what are they going to, you know, announce $30 million in revenue? Hi, Nicole. Yeah, FJET. Let's go to FJET. And here's what's up with FJET. And I found this out late. They're ringing the bell. They're ringing the bell. The New York Stock Exchange. I think it's a sell the news, quite frankly. That's why I'm not, running around screaming about it. But then again, I thought it was a sell the news at 9, and I thought it wasn't favorable at 9, and it just went to 11. Volume is actually way picking up this week. It's the second highest week. But this, to me, it kind of looks like a meme coin. And right now, that's not really where I want to be picking up risk. We're at all-time highs, and I'm looking for juice. That's great. FJET's a little sketchy to me, But yeah, this AXTI stuff. It's like they're not vertically integrated. They're really low. It's better than the other name you gave me, but it's when it comes to tech that is commercialized and trying to get to scale and is hardware, you always have to consider the manufacturing prowess needed to get to a place where it can be a legitimate player. AXDI is not the worst. Poet, Illuma, whatever everyone like is buzzword photonics, and it's just like I don't like buzzword photonics. I don't like buzzword tech in general. Yeah. I mean, generally, you can find some gems there in like OTC markets on businesses, but that thing's losing money, and its revenue is not growing. So it's like trying to tell this story about how is it, it's got a 6-inch wafer, and it's like if you had a 6-inch wafer that you can manufacture at scale, people would be throwing money at you, and your and like the quality of that matters, the yield of that matters. People would be throwing money at you, and certainly your revenue would be up. Permits for Chinese companies. I don't know. Yeah, I don't know. It's there's 10,000 stocks out there, and it doesn't pass the look further test. Okay, what do we want to look at? Let's look at Coherent, and then let's look at Lumentum. Obviously, as far as extensions from 2 intraday goes, it's pretty high. It's pretty high on that extension. Let's just do it. Let's look at the daily chart. 126. That would be a white B if it went down there. But the next time this meets this, I think it's going to be much higher than 130. Excuse me. But you're comparing this to Lumentum, and you're hearing everyone talk about every other, small cap or whatever. But yeah, you're Lumentum's 200 days at 208. So a little bit more extended, a little bit more. Irrational Analysis came out and said that he likes what Marvell is doing on the Celestial front. Also optics. I don't know, maybe. This is a really hated stock. So, sitting at the 200-day false breakdown, it could be a good entry. I like that. I'll just go through the optics names that I do like. What is CN? Really extended in Sienna. I think this is a sort of a miss. It doesn't really have the IP. I would rather, if it's something this extended, I'd rather be in Lumentum. Broadcom has a unit for optics and networking, but it's such a big company, has so many different units that it's definitely not a pure play. But this is a great company. I think everything they're doing, every one of those business segments is pretty primed. It's been hated for a while, and listen, I think it's ready. I think it's time. Let's look at Oracle. Ew. I think we could go back above 200 though over the next couple months. You just need an OpenAI deal. I mean, that's really it. OpenAI gets $120 billion, and everyone's like, okay, it's not going to zero. It's actually kind of got economics if this is modeled out right. So I think people are going to start getting more constructive on Oracle. It's really popular to hate it right now. The Michael Burry thing and all that kind of stuff. So speaking of, let's look at Palantir. Ew. Yeah, look at that though. It broke the 200-day, and then it tried to
like that is ridiculous. Like in that one day, that was earnings, and then it sold off right out. That was ugly. Like once you saw this, like false breakout, close underneath, and then it gapped down the next day, like $2. Realistically, this was a short there. On a technical level. Let's look at Google. Google. I have no idea why this stock isn't higher. It's just going to be straight up with you. Like, they're killing it. Google's actually killing it. Oh no, they're spending too much money. Can someone just use their freaking head for a second? Google's not Mark Zuckerberg. I say this over and over again. Like, when they're deciding how much capex, it is not this wishy, ideal, thing. I'll talk about Amazon in a second. Same thing with Amazon. Google particularly. If they spend money, they're not Microsoft where they should spend money and won't spend money. It's not Meta where they shouldn't spend money on what they're spending money and they do it anyway. Google is like the best read. If they see the Anthropic token usage, if they see the Gemini, take off, if they have all of these startups going through them, and they're saying we're going to spend $185 billion, that's because they see the ROI and feel the need to service those customers, or a competitor is going to take it. Amazon was really far behind. This stock. I don't. There were statistics, like I legitimately don't think there's been an uglier few days outside of a bear market for Amazon. Right? We went from 250 almost 245 to 195. That's ugly. But realistically, I like Amazon better here than I have any time since 2020. I liked it a little bit too long in 2020, but it's the best setup it's had. It's the best setup it's had. It's finally back on track. Anthropic deal helps. They got to stop messing up on Trainium. They keep on saying it's going to be better. It's like, I don't trust them on Trainium, just like I don't trust Mark Zuckerberg on anything. I trust Mark Zuckerberg to do ads. One thing I want to talk about, Amazon's ads makes a whole lot of sense to me, and I think it will continue to make a whole lot of sense as people go to Amazon.com and they're intentive. OpenAI ads makes no sense to me. Gemini ads makes no sense to me. As I'm being paid, right now to go into, hedge funds and consult and tell them what model they should use, what should be their open source. Imagine if, they're trying to do deep research and they're trying to ask a question like, how is this product that, pick a company, Corsair is a great example. How is this 395 workstation? And they're paid, there's some ad in there to like talk about it favorably. Or it says, yeah, but like you should really look at the Dell or Lenovo, option. And it like totally doesn't fit, but Dell or Lenovo, you see how the truth is like the ultimate and advertising is not the truth. Either way though, if advertising gets eliminated and we're paying for agents and agents are giving us the best option, no ad insight involved, one thing, if there's integrated, advertising, like, basically agentic AI I think is going to kill ads, but even if it doesn't, don't you think that you would rather pay ads on somebody who's asking a question versus scrolling through Instagram, looking at the Instagram models like, oh, you need a new toothbrush? And it's like, I was looking at bikini pictures, but now maybe like that sort of meta ad doesn't make any sense anymore. And it's like, well, we know you like, but you're like, but I'm watching memes right now. Why are you trying to sell me something? Versus if you're talking to AI, if you're already looking. It's the same reason why the Amazon ads are better than the Meta ads. You're already committed. You already have your intent. It's just about picking which one you want. So that would hurt Meta. And again, they're trying to do this cloud thing. Let's look at Meta. I'm writing this up. It's the worst mega cap to buy. Everyone was like, "Ooh, big gappy, big gappy. Oh my God, it's going to all-time highs." And it's just like, yeah, no, it's not. No, it's not. It may go to all-time highs, but everything else is going to go up more. And you're dealing with they're trying to like figure out like, oh well, like, do we make a cloud now? Like, you want to make a cloud now, Meta? You want to compete with Google, Amazon, Microsoft, Oracle, CoreWeave, like everyone, NBIS, Iron, because you're so skilled at that, and that's totally your competitive advantage. No, because they're spending so much money, and they're like, shit, like, what do we do? Like, what do we do? Like, we're just gonna sell more ads with all of this spend? Like, maybe we should just do it like everyone else is doing, like try to sell compute. And at that point, they're going so out of their core competency that I think it's a screwed business. Yeah, but AXTI like is not vertically integrated on the substrate. That's why they have to get stuff from China. Versus Coherent is way more vertically integrated. They still have to source materials. Pershing, I think Bill Ackman is a bad investor. Like, I think he's below average, not terrible. He's not like, a fade 100% of the time, but I think he is the most overrated investor there is. But having said that, I like Amazon. Like, if you have a concentrated portfolio and like, his returns are highly emphasized by the fact that he's had a few things, like the COVID trade, the rates trade. I think the rates trade was like kosher. It was a good trade. The Fed was going to raise rates, and he bought swaps, and he made a lot of money, a few $1 billion. The COVID trade, he was on television weeping and crying about his father and how we need to lock down the country, he's like, okay, did I do well? After the screen sets, and he's like, okay, did I do well? All right, give it a little bit, and then close out the rest of my puts. Okay, Bill. Okay. Between those two, it's like $6 billion. If you take that out, he's not a good investor. When I first got my first internship, might have been my second. I can't remember the order of it, because it was in the same fall. I was a sophomore. It should have been my sophomore year. I took a gap, and I worked at a credit fund, and it was 2015 fall. And the big story was Valiant. Oh, Bill Ackman talking about Valiant. And it's like, I remember I sat down, and he wanted, one of the guys, he was nice enough, like, you do a lot of, bitch work. You're summarizing the news, stuff that AI can do in 2 seconds. And, I don't know. They're being nice by letting you in the office. And I worked really hard. So one of the guys, PM, was like, all right, how about you go look up at Valiant and you tell me what you think while we get coffee and about tomorrow or whatever he said. He was like, what do you think? And I was like, well, it looks really cheap. Free cash flow strong, whatever. I said stuff like that. And then he was like, yeah, I agree. Have you ever heard that, sometimes where there's smoke, there's fire? And I was like, yeah. And he was like, well, that's really the question here. Because if there's no fire, this is a buy. But if there is fire, this is not a buy. And we are, being a credit fund, we're not going to buy that debt. And I was like, oh, okay. Thank you. I learned something. What else do I want to talk about? Fix. Comfort systems. Guys, these industrials have gotten so freaking stretched. I love industrials. It was a big part of my thesis. Dudes and dudettes, what are we doing here? I'll talk about AMD in a second. What are we doing here? This is like a 55p, 56. Like, what are we doing here? Okay, you're plumbers for 55 PE, electricians for 55 PE. I don't mean to be too pejorative. They do it, like, I understand why it's up. It's amazing business. They could theoretically, I don't know, move EPS 50% next year, and then what? Like over the course of that amount of time, like they would have to make acquisitions and roll a bunch. Like it's really a stretch. It could happen. Price for perfection going into this print. It's after the bell today. You know, like it either gaps up, and what's the highest it could go? 1,500. Like what do you think a gap would look like here? When they beat by 30%, it gapped up and was like about 20% higher. So like realistically, do you expect that? Like kind of not really. You can sell the $1,500 call for $30, and I think that's free money. Quite frankly, I just don't think. I don't think that they're going to beat by enough to encourage the market after it already got into the S&P. That's a dividend. Where is that? Anyway, it was included into the S&P in December, and it was a total sell the news event. But you see this massive volume right there, and it's like this is just so primed to sell off to like 1,100 or something. So realistically, just to visualize the implied volatility on this thing, it's $162 straddle. Yeah, we're really short on plumbers. We're really short on electricians. And it's a really key and core component of this data center build. And they're going to pay up to make sure that they get the people that can finish the data centers that they're spending so much money on chips for. I get it. I'm long different parts of this chain for, that underlying reason and thesis. Like I get it. But are we really waiting 55 years in today's earnings to get paid back on plumber electricians? Like ultimately you still got to pay them. Once like the margins that they get is like they've like locked these guys down. Like wait until they realize that dude, you're a certified plumber, you should double your salary. You like why are you letting Comfort Systems take all the money? Like wait until they start unionizing around this or whatever the hell they do. It kind of becomes a point of like, this is like realistically a labor business. It shouldn't be trading this high. Yeah, no, we're short on electricians and plumbers. If anyone's listening and figuring out what they should do, it's not a bad idea. But buying fixed, it's like the only thing these big funds can buy. They're like, oh wait, we got to buy something. Buy fixed. It's like you can buy better options down the small cap world that the big funds can't buy, and catch the wave, man. Like it's great catching a company at $10 billion and having it go to 35, and then it gets into the S&P. That's a great off ramp for you. Pershing added Meta, yeah, exactly. Ackman knows just about as much as Mark Zuckerberg knows on how to innovate, right? Like they both think they know a lot, and in reality, they're super overrated for innovator for Mark Zuckerberg and investor for Bill Ackman. He's just full of shit sometimes. He used to be my worst enemy, and then I decided to not care too much. But I still don't think highly of him. The COVID thing that set me off. I was like, you douche, sacre douche. Corsair's at 5.31. Yeah, I mean that was my thesis when I bought it at 5.22. It was just like, listen, why would a company trying to get out? They're not done selling out. That's my point here. What we're gonna see on this is like, why would they just like sell it so it looks like it's going to zero? No, they're gonna make it look ugly, and then they're gonna let it recover, and then they're gonna make it look ugly, and then they're gonna let it recover. And really the thinking there is like they want to train the market to buy the dips so that they can get out, ideally, $6 average. It's just so cheap. Like, if you're a trader, like, Wake Thief, like, I think you're going to be able to see points where it's like, okay, selling's done. I can flip this for an 8 to 10% return. But for everyone else that's not like a trader, if you look out a year on this fund's going to be out. This company is going to make $100 million of EBITDA, 80 to $100 million of EBITDA, 22 cents per share. It's hard. You can't forex that because December quarter is their biggest. But I just think AI is going to be a bigger and bigger component for this. Again, it doesn't need this massive moat, right? It just needs to execute, and they have good management. So I can't be on TikTok for a little bit. First of all, I'm literally not allowed to go live, but I also don't want to lose that account. So what I'm going to be doing is going live here more. So if you want to, see, especially because, like, quite frankly, TikTok, pretty soon after I go live, people start coming in. Here, there's only 11 of you in here. It's not ideal. Like, I have to go tell everyone, please turn on notifications, because that helps me to start and have someone to talk to and most likely to get my question. Got out of FJET. Nice. Yeah, no, I mean, it's good. It's just it's kind of like a sell than a new use thing to me, right? They're going to ring the bell in the morning and I think it's going to go off. It's not dead. It's clearly not dead. And then the question is, for how long, is there some life in it? It's on my board, and I saw it go up, and I was like, volume's not that high. And the volume goes up, I'm like, oh, should have bought it. And then it goes up again, oh, I should have bought it. But at this point, it's like $11, risk reward is not amazing. Anywho, yeah. It's one of the harder things to do, and I'm not perfect. But what happened with Corsair is it's pretty straightforward. It's I'm thinking okay, down, uptick rule triggered. Now only legitimate sellers can make it go down, and it goes down more, and it's shit. What funds could be selling this? I feel like Eagle Tree is not selling, and then I go and through the institutional holders, and I'm like, it's got to be Eagle Tree, right? Let me just go. How are they selling? There's no filings, and then I go back to last August, shelf, and then when I see that, I'm like, shit, they can sell. No, but actually at that point I was like, shit, okay, they clearly have the intent. And then I was trying to figure out, don't they have to put a 144? So then I'm calling people and asking questions, and you can live in denial, but it is what it is. And especially if I have people that like my ideas and tail, I got to think fast. And quite frankly, I could have saved a lot of money by just being as soon as I found out, focus on the P&L, but at that point I'm typing up as frantically as I can, putting in the Discord, putting in, as frantically as I can, to get it out, to, make sure that everyone as soon as possible gets the information that they need, that I missed. That is, it's not unreasonable to miss, because they did it for a reason like that. They hit it for a reason like that. But the real big mistake is I should have looked at I should have connected the vintage to when they would be harvesting. And for that, I am sorry, and I will take the lesson, and I will be better because of it. Yeah, it's the PEG, do you understand how manipulatable that is? You're talking about P ratios divided by the growth rate. P ratios are a gap instrument. Do not take out one-time expenses. It's a strange thing to do, quite frankly. If there's nothing, if it's a clean income statement, then you can do that and it makes sense. It doesn't mean that it's the rule of law or God. It's a useful tool, but if you're really relying on PEG, it's look at the financial statements. It's a cheat. It's oh, I just look at the PEG and it tells me the answer. And it's doesn't. You know, if every time a stock was under 1 PEG, it went up, and if every time it was over 2 PEG, it went down, like it would be ridiculous, right? Like that's ridiculous. Um, you know, Corsair grew 20% next year as a forward PE of 9 or 8. So it's got, you know, a PEG of 0.45 forward. But trailing has no earnings. Why does it have no earnings? Because they have one-time expenses, and it's not indicative of the profitability of the true business that is 33% gross margins. You know, and also, just because something has a growth rate now doesn't mean that growth rate's going to stay. So you still got to figure out the market. You got to figure out the products. You got to figure out who's competing. Where's it going to go? What are the give and takes? What are the probabilities? And that's what you do in Coherent and Lumentum. The easy thing that's like kind of pretty hard to manipulate is look at the price to sales. Look at the price to sales of Coherent. Look at the price to sales of Lumentum. Look at the gross margins of Coherent. Look at the gross margins of Lumentum. That's what a growth investor does, because they realize once you get below gross profit, a lot of things can be changing that aren't true of the long-term profitability of the business, right? SG&A might be bloated because they're really trying to be in growth mode. You know, maybe if they manufacture more and get to scale, gross margins can go up. That's why you hear people talk about revenue growth and gross margins so often, because then once you have the growth, like the idea of where gross margins are going to be, you can start guessing what the costs below that are, you know, ending with a tax rate, and then you get a PE and back into it. That's what like financial analysts do, you know, the idea that, and I'm not like literally, there are some people at hedge funds and there are some people that are wealth managers that just look at PEGs and just like, PEG. I buy it because PEG, I sell it because PEG. But those are not the smart people. Those are not the people that make money in markets. So yeah, you can't really look at the PEG on Coherent. You know, you got to separate it. Look at, you know, what do you think EPS is going to be? I think it's, you know, going to be $8 to $9. And then the growth rate, I think, is going to be 30, 35. So, you know, at that point, you're looking, you know, 25 forward PE at a 30 growth rate. And then you can calculate the PEG from there, which is under 1. But again, PEG only tells you 1 year. Forward PE only tells you 1 year. Photonics, optics, it's a multi-year trend. So you can always look out 1 year and reanalyze it every single day, or you can step back a minute and be like, well, you know, what at 2030 does this market look like? What is the technology that's happening here? And how big is, you know, all of the potential, you know, pie? And maybe I can't even imagine what some products are going to be, but like which companies have a good shot, which companies are reasonably priced to achieve that. Coherent's story is really on the manufacturing side, Lumentum's on IP, and to each their own. You know, you can own both, you can own one or the other. As long as you understand the business and you're not just buying it because people are talking about it now. It's not. It's an informed speculation, really, on what the valuable technology in the future are going to be. Anyway, all right, I'm going to sign off now because I have to do some work. See y'all. Thanks for coming.